This video will cover symmetry, why you should use symmetry. We'll also watch symmetry in action. We'll talk about the math of the market, and we'll also walk through swings, major and minor, as well as the step-by-step process in using symmetry with your trading. You may be asking, why would I use market symmetry? Well, first off, it's objective. It's not user-defined, it's market data-defined. And many times, user-defined support and resistance levels are not important to the market whatsoever. And it's because they are arbitrary and not objective. Symmetry also provides you with an identification of the trend. It gives you an idea of what the character of the market is. Symmetry is created from using past historical market data, which is purely objective and market defined. And algorithms use this data. Mathematics is their language. If you review the S&P 500's history, you'll see symmetry pop up over and over. This works with all trading styles because it works on every time frame. Before learning how to use market symmetry with your trading, let's see it in action. In this section, we're going to talk about the math of the market and how it relates to traditional support and resistance levels. Again, traditional support and resistance levels are user-defined and not market data defined. Do they work? Sometimes, but the majority of the times they do not. In the coming examples, you will see blue lines and green lines. The blue lines are traditional support and resistance levels, and the green lines are gaps in charts that need to be filled. It's important to note that majority of traders use these traditional support and resistance levels, and 90% of traders fail. Market algorithms are programmed around these tactics. What you'll notice here is the first support did not hold and price stopped exactly at the symmetry clusters between all support levels. Not even Fibonacci retracements held. Here, all Fibonacci retracements were ran from the swing low to the swing high, and none of them held, like symmetry did. And in fact, price hit to the exact penny in the symmetry cluster. And here are the plots for the Fibonacci extensions. As you can see, symmetry fell right between retracements and extensions. In this example, watch it blow through the gap and then gap the traditional support and resistance level and stop at symmetry and bounce. Again, the symmetry plots are plotted with using real market data. Watch price come down to the exact penny of the symmetry cluster and come up short of the support level. So if you were waiting to buy at support, well, you just missed a trade. In this example, watch price shoot straight through the gap and support level and bounce exactly at symmetry. It was as if support didn't even exist at those levels. Here, price comes up short of the support and gap level and bounces at the symmetry cluster. Here's an example where it stops between both support levels. The results are stopping traders out and leaving buyers behind. Right dead center to the penny between the gap and the support level. If you're a disciplined trader and you bought the gap, you would have been stopped out because there was a candle close below the gap. And once again, price bounced at the symmetry cluster. Market symmetry is a byproduct of a trend, and it is developed by trend components, major swings and minor swings, and when combined they equal a trend. Visualize a staircase. The staircase is the trend, and each step is a swing in that trend. And we want to find and plot as many steps that are equal size. Here we'll watch a trend develop to the downside. The white line is the major swing. The blue and purple lines are the minor swings. Here are the swings with the chart candles removed. Same idea here, just going in the opposite direction. Here is an example how you can use symmetry over and over again in a trending market. Here we begin the step-by-step process. Tool and tool settings, how to identify the trend, selecting the correct anchor pivot, and how to measure all the major and minor swings within a trend. We will be plotting our measurements from right to left, from present to past, and then finally chart cleanup, which levels to keep and which levels to remove. Here you will learn which tool you need and what the settings are required to measure symmetry in the Thinkorswim platform, Tradingview platform, and Tradestation. Step 1. Identify the trend. Step 2. Select your pivot anchor point. Here I'm highlighting the swings that will be measured. And all measured swings are anchored back to the pivot. Now select the tool that we adjusted in the Tool Settings section and begin the plotting process. Once all swings have been measured and plotted, it's time to clean the chart up. You want to remove all levels that price closed above, and remove any single levels that are not accompanied by other levels in a tight range. We are looking for a clustering effect, which represents a continuity of past market historical data. Once complete, you have a chart that represents pure objective market data, and not user-defined support and resistance levels that the market probably will not find important. This is the same process, but in the reverse direction. I want to highlight one last thing. Not only does symmetry work on the price axis, it also works on the time axis. And when price and time intersect, you have the highest probabilities. The following example is brief. More details on this in a future video. And that's it. Now you are equipped with one of the most powerful market tools.